As the third and final video in our Who, What, and Where series, today we're going to be talking about the where, which are the intermediaries or the websites where you go to make regulation crowdfunding investments. There's three topics we're going to be covering in today's lesson. First, we're going to be talking about the differences between broker-dealers and funding portals and what that means for investors. Second, we're going to be getting into what the top funding portals and broker-dealers are as of mid-2019. We'll be looking at comparisons of fees, deal flow, and many more important things. Last but not least, we're going to be talking about something called Intrastate Crowdfunding and how that may be applicable to some investors. Again, I'm Brian, founder of CrowdWise. Thank you for being here at CrowdWise Academy. Let's get into today's lesson. In the Lesson 3 course today of the Level 2 Module 2 Investor courses, we're going to talk about the where to invest in crowdfunding deals, which are called intermediaries. And we'll be breaking down the difference between funding portals and broker-dealers. Make sure to stick around for the entire lesson, as we'll also be talking about important differences between some of the top funding portals today, such as fees, deal flow, due diligence, and many other aspects that are important for investors. As a reminder, you are part of the Startup Investing 101 course, Level 2, Module 2. If you haven't already, create your free account at academy.crowdwise.org for the best learning experience. So, as an investor, where do you go to invest in a business? Let's assume an early-stage startup decides to raise capital via regulation crowdfunding. Can they just go directly to a group of investors? The answer, under Reg CF, is absolutely not. There has to be a regulated entity called an intermediary where the Reg CF business goes to first. That intermediary, which can be either a funding portal or a broker-dealer, can then list that business's security on their platform and offer it to investors. To understand better about where securities are purchased in crowdfunding, it can be helpful to demonstrate how it differs from the public markets. Let's assume a business goes public, so they are listed on a national exchange, such as the NASDAQ, New York Stock Exchange, or many others. As you know, many businesses are listed on national exchanges, and you can purchase most of these through brokerages, with just a few examples shown here. So, as an investor, you can create an account on any one of many brokerage platforms, and then, typically, that platform has access to purchase any stock that's listed on the national exchange. This is very different from how crowdfunding securities work. To illustrate this, assume a business decides to use regulation crowdfunding. There are many startups, as you know, that decide to use crowdfunding today. And so as an investor, you also have to go through this intermediary, such as WeFunder, StartEngine, or many others. An investor can create an account with each of these intermediaries, but that is where it starts to differ from the public markets. In crowdfunding, on any given intermediary, you can only purchase the securities for that business that are listed on that platform. So, for example, if you create an account with StartEngine but want to purchase Startup X that's offered on WeFunder, the answer is, today, you aren't allowed to do that. The takeaway for investors is that you may create many accounts to be able to get access to all the startups that you want to invest in. Another important thing to understand is the difference between a primary and a secondary market. A primary market is when a business makes an initial offering to raise new capital. This is what most of the existing crowdfunding portals, such as WeFunder, StartEngine, SeedInvest, Republic, and others, are today. Contrast this with a secondary market. A secondary market is the buying and selling of shares that are already owned by investors as well as employees or anyone else. Examples of secondary markets today is Net Capital as well as EquityZen, which provides liquidity by allowing employees to sell private shares to accredited investors. Let's use the Net Capital as an example, since it has both a primary and secondary market. Assume you buy a business on Net Capital under a primary offering. Through the secondary market, once you own those shares, you could sell that as long as it complies with the transfer and resale restrictions to another investor, even after the campaign has closed. Similarly, you can purchase shares from people who are looking to sell their shares on the secondary market. Again, the takeaway for investors here is that you shouldn't depend on the secondary markets since they are very illiquid and still being developed today. Let's now take a deeper dive and understand the two different types of crowdfunding intermediaries. As we mentioned, the two types are 1. A funding portal, and 2. A broker-dealer. Both of these have to be registered with the SEC as well as a member of FINRA. And regardless of which type a portal is, all intermediaries have to conduct background checks on officers, directors, and 20% equity holders, conduct bad actor checks on issuers and participants, and be subject to anti-fraud and anti-manipulation provisions. To understand some of the differences, let's first look at a funding portal. The funding portal is a new type of regulated entity that was created by Title III of the Jobs Act when Reg CF came out. A funding portal is not legally permitted to offer investment advice or recommendations, solicit purchases, sales, or offers to buy securities offered or displayed on its website, compensate employees, agents, or others for solicitation or for the sale of securities displayed or referenced on its website, and they cannot hold, manage, possess, or otherwise handle any investor funds or securities. The takeaway here is that funding portals are essentially passive marketplaces that connect issuers, that is, the businesses raising the capital, with investors, but they cannot offer investment advice or recommendations or do the other things listed here. The second entity type is the broker-dealer. Now, understand a broker-dealer may be an individual or a company. That's because a broker-dealer has existed for decades as market makers, so it's not something that's new with the Jobs Act. They are subject to much stricter standards than funding portals, such as anti-money laundering, know your customer, additional due diligence, and other requirements. In contrast to a funding portal, then, a broker-dealer may do all of those things that we mentioned, such as offer investment advice or recommendations, solicit purchases, sales, or offers to buy securities, compensate employees, agents, or others for solicitation or for the sale of securities, and hold, manage, possess, or otherwise handle investor funds or securities. While there are additional requirements to become a broker-dealer, it can give the platform more flexibility to do some of these things. How do you find out which type, whether a funding portal or a broker-dealer, the website is that you want to use? The best way is to use a broker-dealer list that you can do a search on finra.org at this link, or use BrokerCheck, which will also search if it's an investment advisor firm. For a list of funding portals, you can check out the FINRA website here. Also, the best way is probably to check out the About Us page or footer disclosures on an intermediary's website. Just remember, many Reg CF and Reg A+ websites today operate as both a broker-dealer and a funding portal, or even an investment advisor firm. So intermediaries can be complicated, to say the least. To show what we mean, let's take a look at WeFunder and how they structure themselves legally. At the top level is WeFunder Incorporated. That's the parent company. They are not registered as a broker-dealer, funding portal, or anything else. Then, under WeFunder Inc. is WeFunder Portal, LLC, which is the registered funding portal, as well as WeFunder Advisors, LLC, which is an investment advisor firm for their special purpose vehicle and Reg D offerings. Next, let's look at how StartEngine structures themselves. StartEngine Crowdfunding Incorporated is the top-level parent company. Again, this is not registered as a funding portal, broker-dealer, or investment advisor. Then, StartEngine Capital LLC is the registered funding portal entity, while, as of late July 2019, StartEngine Primary LLC is the newly registered broker-dealer. It can be helpful for investors to know whether an offering is being made under a broker-dealer because there are some of those stricter due diligence standards. However, for the most part, it won't impact how you make your investments, and unless you're reading through the fine print, you probably won't even know which one you're investing through. Let's briefly look at some Form C filing trends to understand where the Reg CF industry is today in terms of intermediaries and number of filings. If you look at the monthly filing trend for number of Form C filings, which are the regulation crowdfunding offerings, you can see that there was a big jump from 2016 to 2017 and even a jump from 2017 to 2018, but since 2018, the number of filings remained relatively flat. When you break this down and look at the number of Form C filings by each intermediary or funding portal, you can see that the top four, StartEngine, WeFunder, SeedInvest, and Republic, which is Open Deal Portal LLC, take the majority of the regulation crowdfunding offerings. Similar data, but broken down by pie chart, you can see more easily visually how StartEngine and WeFunder account for almost half of all Reg CF offerings in 2019, whereas the top four account for roughly 2/3, and the top 9 funding portals account for roughly 80% of all filings. Let's look at a brief funding portal summary of the top 4 funding portals today and compare some of the important things that investors care about. We'll go column by column, starting with whether a funding portal performs extra due diligence or has deal curation. WeFunder and StartEngine, at least as of today in 2019, do not typically do extra due diligence or have deal curation. However, SeedInvest, owned by Circle, as well as Republic, do have additional due diligence standards and curate deals that are offered on their platforms. Looking at the total volume of Reg CF funds that have been raised, as well as the number of deals, since the start of Reg CF in 2016, WeFunder has raised the most to date, followed by StartEngine and SeedInvest coming in roughly tied for second, with Republic following that. In terms of 2019 offerings through the end of July, StartEngine has had the most, followed by WeFunder and then the other two. Now, investor fees for regulation crowdfunding investors is something that you should consider, though it shouldn't necessarily drive your strategy. Both Republic and StartEngine have 0 fees for investors, whereas SeedInvest and WeFunder charge a percentage, 2% and 3.5% respectively. In terms of the types of primary securities that are offered, WeFunder has a lot of safes, the simple agreement for future equity securities that we have discussed in the past, but does offer other equity securities as well. StartEngine has very diverse offerings in terms of the types of securities. SeedInvest tends to prefer the convertible note, but does have equity offerings as well. And Republic, for the Reg CF offerings, focuses solely on their CrowdSafe, as well as some token-type offerings. Another potential consideration for investors in terms of which funding portal they invest on is that some of these funding portals offer unique incentives. WeFunder and SeedInvest offer an early bird discount, meaning that the earlier in a campaign you invest, the cheaper the valuation you can invest at with some offerings. With StartEngine, they have their owner's bonus program, where if you are an investor in StartEngine itself, depending on if you meet the requirements, you can get up to 10% bonus shares on qualified offerings on their platform. SeedInvest also has an auto-invest program. Since SeedInvest does typically have higher minimum investment amounts, around $1,000 per deal, by signing up for their auto-invest program, it can lower it to more like $200 a deal. And last but not least, Republic is doing some really interesting things with their note tokens. Today, notes are really a type of gamification for the investors that can unlock certain perks. However, Republic has mentioned that they are working with regulators to get these tokens to share in the potential future profits of any businesses that have a positive exit from the Republic platform. In addition, Republic typically has crowd perks listed with each deal. Similar to Kickstarter, investors can get certain perks when they invest certain thresholds of money. For example, a sticker for $100, your name on the website for $250, a t-shirt for $500, and on and on. However, I will note that there have been some very valuable offerings with some of these, such as $500 gift certificates, in-person meetups, and many other perks, so it's worth checking out. While it's worth checking out, again, make sure that you're not letting that become the driver of your decisions of what to invest in or not. This is only the top 4 funding portals today by number of filings as of 2019, and also not an exhaustive list of the different criteria that investors should care about. To get the latest checklist with the top 8 funding portals and additional details on each one for investors, download the checklist for free at crowdwise.org/portals. Last but not least, we want to mention something called Intrastate Crowdfunding, which essentially covers the securities regulations at the state level. We'll discuss what blue sky laws are, and we'll point you where you can go to learn more. There's too much to cover with the nuances of each state, So we simply are looking to introduce you to the concepts where you can get more information for your state. To understand what blue sky laws are, it's first important to define a legal term called preemption. Preemption is essentially the invalidation or superseding of a U.S. state-level law when there's a conflicting federal law. In this case, the conflicting federal law will be either Regulation Crowdfunding or Regulation A+. So, what are the blue sky laws? They are anti-fraud securities regulations at the state level. Thus, Regulation Crowdfunding preempts, that is to say overrules, state regulation of offerings in most cases. There are some states that will still have notice filing requirements, but even that will be limited to the state of the principal place of business for a startup and the state where more than 50% of securities were sold, if any. Now, under Regulation A+, it's interesting to note that Tier 1 and Tier 2 differ from preemption. Tier 1, which are those offerings up to $20 million, does not have preemption of blue sky laws. This means that those businesses that raise under Tier 1 will still have to comply with the securities regulations of each additional state that they raise in. However, Tier 2 offerings up to the $50 million limit do have preemption of blue sky laws. Just remember, laws are constantly changing, so always refer to the latest for your state. None of this is intended to be legal guidance, so always check your state's website for the latest. Another place you can go is nasaa.org, which will have the latest state laws. NASA is the North American Securities Administrators Association. Here's a list of some of the states today that do have their own intrastate crowdfunding laws. Again, the takeaway for investors is that if you see your state on this list, it may be worth checking out the website for your state, as there may be additional funding portals under state regulations. It is worth noting that many of the states, such as Minnesota, have been using state regulations to improve upon some of the potential shortcomings of regulation crowdfunding, such as having higher minimums that businesses can raise, among many other differences. Let's recap what we've learned today. We've discussed the two types of crowdfunding intermediaries, both a funding portal and a broker-dealer. We've shown how there are roughly 50 funding portals registered in 2019, and what some of those top funding portals are, how roughly half of all Reg CF deals are on the top two alone, StartEngine and WeFunder, while roughly 2/3 of all Reg CF deals in 2019 are on the top four, StartEngine, WeFunder, SeedInvest, and Republic. Knowing that so many deals are on the top four, why would you go to any of the others? Well, the fact is that other portals may focus and specialize on niche offerings. For example, energy, Main Street businesses, biopharma, real estate, cannabis, extended reality, esports, water solutions, art, and many more. If there's a particular industry or niche that you are interested in, it may be worth checking out some of the other funding portals that specialize in those offerings. Lastly, we discussed intrastate crowdfunding exemptions and how some of those funding portals may offer additional investment opportunities with some differences from the federal regulations. Congratulations! You've made it to the end of Level 2, Module 2. Your homework, should you choose to accept it, is to take the Level 2, Module 2 quiz, test your knowledge and solidify your learnings. Also, view the brief video lesson that follows this, which will give an overview of your Level 2 capstone project. In that project, you're going to create your first equity crowdfunding investor account on a funding portal. Then, after the Level 2 project, move on to the Level 3 Advanced Investor courses. It will help that you have an account created already on one or two funding portals for these courses, since in Module 1, we're going to be covering due diligence and screening deals. In Module 2, we'll be talking about additional topics, such as taxes, tokens, and secondary markets. In Module 3, we'll break down what it takes to make your first or your 10th crowdfunding investment. Thank you again for joining us here in the Level 2 Investor courses. If you haven't already, create your free account at crowdwise.academy.org. Also, make sure to click subscribe to our YouTube channel so you get all the latest crowdfunding investor tips and tricks whenever we release a new video. And last but not least, follow us on social so you can stay in touch and reach out with any questions. This is Brian from CrowdWise, and again, I personally want to thank you for going through these investor courses. If you have any feedback at all, whether positive or constructive, please send it to brian@crowdwise.org or reach out to our social. I love to hear from our investors and what you think is useful and what is new in the investment crowdfunding industry. Go and complete your homework for Level 2, and I'll see you back here for the Level 3 Advanced Investor courses.